All right, NYB community, thank you for coming back to us. Episode number 207 of the Minding Your Business podcast. I'm your host, Champ Ron, and entrepreneurship, real estate, trending news. There's no business like minding your own. We're recording this Friday, October the 9th. God, I mean, time just flies. I mean, we're going to be, we just started October, then we're going to be the midpoint of October, and then the end. I mean, it's just flying by. And I hope that this podcast reaches you in good spirits and in good health and in good mindset to receive the information that we're going to get from today's guest. Subscribe to the podcast, 5 star, 5 star, wherever you get your pods. That helps us continue to expand the NYB community. And you, as always, you can go to champronbrooks.com. Listen, as I spoke of today's guest, I'm excited to have her on. Her name is Tatiana Tsoir. She is the CPA expert, a wealth of experience, over 15 years of experience in helping folks just like you, entrepreneurs and business owners, just become a little bit better. You know, we always talk about being a little better for yourself and for your family and for your community. And Tatiana is no stranger to that. She helps all of us, and she has the potential to help us today with her feedback here on this particular episode. She has a book coming up that we're going to talk a little bit about. Dream Bold, Start Smart. We're looking for that release towards the spring, and we want to make sure that when that happens, we get that to you, MYB community, so that you can pick up that information, that knowledge. So we'll make sure we'll stay in touch with Tatiana so that she can provide that for us. But Tatiana Tsoir, our guest today, thank you so much for joining.
Thanks so much for having me. I'm so excited to be here.
Yeah, absolutely. I'm excited to have you here. And I love your background. For those you're missing it if you're listening to the recorded audio podcast, but for those watching on video, YouTube and whatnot, I love her nice, she got a nice kind of artistic background, but then it's simple at the same time. So definitely love that. Um, Tatiana, let's jump right into it though, because we've got a good bit to talk about. Particularly, and it's very timely with what you do and in today's environment. But before we get to that, let's learn a little bit about yourself. Tell us about you and how you got your started in kind of your pathway to what you're doing today.
Sure. So I'll keep it brief. I won't bore you with my with my past, but I started out as a bookkeeper, and just things worked out that way in a way that I had to quit my full time job and get part time bookkeeping clients who needed me for, let's say, a day or a couple of hours or whatever. And because of that, I got an insight into different businesses, and I worked with different businesses, industries, CEO, leadership styles, and all of them had different concerns, different issues, and so on. And because of that, I sort of became an entrepreneur. When I finished college, I had to get my CPA license, and so I went to work full time first for a firm to get my tax experience and my license requirement. And as I was working there, I realized that I will always want to be my own boss. I will
Sure.
always will want to go back to running my own thing. And
Yeah.
so once I satisfied the requirement, I got pregnant. I
Hmm.
decided there's no better time to start my own practice. So I added tax to my already existing bookkeeping little practice, and I grew it over the next 10 years.
Yeah.
And basically here, like, I got a couple of years ago, I got trained in different a couple of different things. One is the proactive tax planning, where I help businesses work with them throughout the year to actually help them save money on tax proactively, as opposed to when the year is over and there's not much you can do.
Sure.
I also got trained in price psychology, and I help clients tweak their prices so that their customers see the kind of the match between the value and the price.
Yeah.
Um, and obviously that results in higher profitability and higher customer satisfaction because there is that perceived value and price match.
Yeah.
Um, and and also I've got trained in Profit First, which is a cash management system that many businesses utilize, which is very powerful, which works around a person's habits, let's say, to make financial decisions by looking at their bank account. Profit First works around it by setting mechanisms to prevent you from spending the money that you don't have. So because of that,
Mm.
now my practice is kind of a holistic approach to a business. So it
Mhm.
involves a little bit of coaching, a little bit of me actually doing the work,
Sure.
a little bit of advisory and strategy. And I work with businesses kind of weekly or sometimes daily or monthly or whatever the package is, but it's more
Yeah.
holistic. I no longer work with people that just need their taxes done because honestly, if you think about it, it's a very limiting service for the client because the client thinks that they're getting tax advice, but they really aren't because in that short period of time of tax season, an accountant only has maybe an hour or two to spend on your tax return.
Right.
So there's no really time to like think, oh, I should tell this person to, I don't know, convert to an S corp or convert to a C corp or maybe form another company or something.
Right.
So right now that's the business, that's the practice.
Yeah, excellent. No, I appreciate you sharing that, and that's unique. As you think about that, particularly when you're talking about helping businesses with their price strategy. Oftentimes, I know for me, I've never experienced that with someone who would be my, I would hire as my CPA, right? That's typically a business strategist,
Yeah.
or for most businesses, it's just themselves, right? And it's just looking at competition, and you have a very homogenous, very limited view and scope on pricing. I'm interested kind of going down that path a little bit. As you help businesses with pricing, particularly in these times now that we see, Tatiana, what's kind of the best practice? What are things that someone listening to this should take into account when assessing price? Whether it's initial price offerings or kind of over time as the business and the environment around it evolves.
So let's talk about the initial pricing first, because that's kind of where many people sort of go wrong or just go with their gut or just pick a number kind of and stick to it. It's not a good strategy. It's actually not a strategy at all. And typically, where I advise clients on that, or not just clients, but also students, and in my book, I talk about the fact that first of all, there should be a strategy. There
Yes.
are two major pools or sides or buckets or whatever you might call it of pricing strategy. And number one is the low price leadership.
Right.
And all companies in that bucket compete on one thing and one thing only, and that's the price. So typically the way it works is like Walmart, IKEA, Southwest Airlines, they're all compete on price. So they try to minimize their cost and make money on the volume.
Right. Hmm.
The flip side of that of a pricing strategy is high value differentiation. So
Sure.
if the companies differentiate themselves based on some parameters that they think are important for their buyers, for their customers. And here we have a huge variety of approaches. Some people, let's say car washes for a moment. How much do you
Yeah.
think a car wash should cost? Or what's a good price for a car wash?
So for an individual car going through I guess, an automated car wash or one that's being washed by human beings,
Just in general,
just in
just like
general?
like if you were to come to a car wash station and you
Yeah.
saw the prices, which price would make you say, "Oh, that's expensive?"
Yeah,
And
you know what? You know what? It's a good question. And NYB, I love to hear from you. Yeah, email me, ron@champronbrooks.com. Tatiana poses a great question. I love to hear from you guys. Or hit me up on social media at champron, and let me know what your thoughts are on that question. What would you spend on a car wash? I like that. That's great heading into the weekend.
yeah.
Stump everybody. Are you smarter than a fifth grader? Um,
So think
so
about it.
well, I want to answer that.
Okay.
So for me, I guess, Tatiana, I would, if I go up to a car wash and it's one of those automated ones where you're going through the machine or whatnot, I tend to go in the middle, right? So you have the least expensive option usually is $5 or $10 or something like that. And then you've got this middle option that's like 15. Sometimes they'll stick, best value next to it or whatever, or most recommended, whatever. And I know what that is. That's to try to direct to where you want, right? And then you've got the the more expensive one that's usually, might be 25 or $30, and it's the whole shebang, right? And so you're thinking, okay, well, I just need to wash the car. Yeah, it's nice to get some shine on the tires, blah blah blah. As long as I come out looking clean and stuff, whatever. Um, but I want a little bit more than what the basic has at 5 or 10. I don't want them to just shoot water on my car, right? Um, so
Okay.
I do want it to be nice and that sort of thing. So yeah, for me personally, I tend to go with that middle. Sometimes it's usually $10 to $20, kind of price range.
Got it. Okay. So we're actually it's a great thing that I asked you the question because
Yeah,
now I can dissect your answer and show kind of illustrate how price psychology works.
yeah,
So first of all, there is no such thing as a price for something because think about this. A car wash, I get the cheapest one. I get the regular wash with the tire shine,
yeah.
$14.
There you go.
But once a year after the winter, because the kids make a mess in the car, I typically get a $170 car wash where they not only wash it manually, but they also detail the entire car. They
Right.
vacuum it. It's completely shining inside and out.
Yeah.
So there you have a difference between $14 and $170.
Right.
Now, there are car washes that cost $5,000.
Of course.
Those are for cars that cost, half a million, $1 million.
Right.
And when people spend this kind of money on a car, spending another 5 grand on detailing it once a year or twice a year is not a big deal.
It's not a big deal. No, not at all.
So this is to illustrate the point that when you opt in for the high value differentiation bucket or area or whatever playing field of a price strategy, you can differentiate pretty much anything. So you pick the price that makes your business profitable. And what happens a lot of times when people are starting a business is, let's say you're an artist and you
Right.
decided to do a workshop and you charge $40 for it.
Sure.
Then a year goes by and you suddenly realize, you know what? I'm not really making money. Price psychology is designed to help you know that before you even start so that you don't waste that year of not making money.
Mm.
And once you've picked the strategy, whether you're going to compete on price or
Right.
compete on value, that's your first decision because
Yeah.
that influences how you're going to market your product, your service, and how you're going to build your business,
Yeah.
the strategy that you're going to use.
Right. Yep, exactly. And so, if you go down a little bit on that, kind of the thought of price against value. Because here's what you tend to find out, and a lot of listeners probably can relate to this, Tatiana, which is a lot of people go into price. A lot of people start kind of like social media business. They start, their way of going to market is on social media. They're completely reliant on social media, for the most part, aside from calling people they know, maybe on the phone or text or something like that, or maybe email. But they're largely relying on social media, and so then their pricing because, and again, I say this and I've said it in jest on other episodes, and some people don't care for it, but the whole know your worth, kind of campaign is just that, know your worth. It doesn't mean
Yeah,
it's high on everything.
yeah,
There's certain tasks that my worth is not high on, right?
that's right.
And
Yeah,
so, but in social media world, that know your worth piece tends to make people then create pricing strategies based on, value when it's not really there, right? Because their know your worth is now I'm gonna charge $5,000 to wash your Corolla because I know my worth, right?
yeah,
And so
absolutely.
then they don't do any business because they think they should be charging $5,000 when they really should be charging 10, and then they come back complaining that they can't do any business. And so
Yeah,
that's a really, kind of gross example, but it's a lot of what I see a lot of people do from a social media standpoint. What's kind of your thoughts on that? That people, like you say, just they arbitrarily just pick something, or they, Tatiana, select their pricing strategy based on their bills, right? So there, and this happens especially in the car wash, like you talked about detail. I detail your car for $100 because I'm kind of good. I just got paid. I've done some other deals. $100, whatever, no big deal. I'll take care of Tatiana. And then I come across Ron with the same car, and the utility bill, companies on my back, and so is Capital One, and so is T-Mobile, and everybody else is on my back. The mortgage is due next week. So run 175, right?
Yeah.
And I don't
Yeah.
really have any rhyme or reason to that. It varies based on how I feel, what mood I'm in, and which collectors are calling or not calling,
Yeah. Yeah. Yeah.
right?
Yeah. Well, you brought an interesting point, which actually deviates a little bit from the price psychology, but
Yeah,
let's go with it for a second. So typically, ideally, and this is what I kind of teach my students, ideally, before you even start a business, you should run some numbers. You should understand, okay, so if I were to open a car wash, first
right.
of all, how much money do I need to actually build one? And then what are my operating costs every month? So then I kind of back out the number of car washes and detailings that I need to do to be able to break even, to be at zero.
Yes,
And then the next step would be, okay, if I'm breaking even, I do an introductory discounted period, even though I don't like the word discount. Um, I've built up my customer base. Maybe I raise prices. How do I raise prices so that I don't lose a lot of customers? That's where price psychology kicks in a little bit.
sure.
But that's kind of the first and the foundational step that any business owner should do. And if they are in business already, it doesn't hurt to go back and revisit the overall business model, like who's paying whom and for what, and kind of what value are they getting. For people who
Yeah,
are purchasing your service, it's all about the perceived value. Did I just pay for 5,000 of something, if something for something, $5,000? Is it worth $5,000? Is it giving me
right.
that
At
benefit?
least,
Yeah.
right. Yeah, and
So
typically, would you say, Tatiana, that it needs to exceed that value? So, do you find that most people in their pricing strategy, from the consumer standpoint, then look for, okay, am I getting a deal? So, if it's 5,000 to me, it may be worth seven, it may be worth eight, maybe 10, and
correct.
I'm getting it in my perception for five. You know,
Yep. Ideally, the perceived value would be higher than the price.
yes,
Ideally, the difference wouldn't be as huge, because if the difference between the perceived value and the price is fairly significant, then you're probably selling yourself too cheap.
yeah.
But ideally, yes, ideally it should be higher than the price for sure.
Yeah, absolutely. No, it's a great exercise. I like that conversation. Definitely for sure.
There,
Just- oh, go ahead.
there's something else that you've mentioned that actually can bring us back into the price psychology, which I
Sure.
liked, because I was like, oh my God, this is great because we can actually illustrate a concept. So
Yeah.
typically, price psychology differs for products and services. And for the product, it's hard to create the same structure that you would do for the service. And here's what I mean. For the service, it is usually considered classic price psychology, or whatever, classic approach, to have three packages. Three looks good on the screen. It's easy. It's not too little, not too big of a choice. And statistically, 60% of people choose the middle option.
Yeah.
So when you said that you don't choose the cheapest one and not the most expensive one, you choose the middle. More
That's
than
most
half of
people.
your yeah, more than half of the people of your customers will choose that option. What that tells you as a business owner is that you should pack that option with value, but also price it so that your business can actually stay in business.
Right.
So because you will be selling mostly that middle package.
Yes. Yep.
Now,
That makes sense.
yeah. So now going back to the product, with the product, it's really hard to do it that way. And for, obviously Apple has been kind of in case studies for many courses and MBA programs and so on and so forth. But for many years, Apple actually, when you were to buy a computer, which is a product, it would have two options, two screens. Like you would choose from kind of two things. And I guess they found a way to actually create the three option scenario. I recently just did a case study on them for one of my programs. So I
Yeah.
know they've changed from two to three. So
Okay.
now they have two screens, 21-inch and 27-inch for the iMac. And that choice is a little tiny bar at the top of the page, 27 or 21. Then you,
Right.
you kind of click on that, and then it shows you three options. So 3.1 gigahertz, 3.5 gigahertz, 3.6 gigahertz. So
Yeah.
you pick one of the three. And naturally, people choose the middle option. So then Apple has done it really interestingly because what they do is they send you through a series of upsells. So,
Okay.
okay, you're adding this computer to your cart. And now, would you like to upgrade the memory? Would you like to upgrade the hard drive? Would you like to upgrade this? Would you like to add the software or a mouse or keyboard to this
Right.
purchase? So that's extremely smart because Apple knows once you clicked the button to add this computer to your cart, you are in what's called a buying mode.
Yes.
So as long as those extra components are reasonably priced, I mean, you can't really talk about reasonably priced with Apple products, but but as long as they're priced, in my mind, I see that they're smaller prices, so they don't cost as much as a computer.
Right.
Someone can end up adding a $2,000 computer to a card, but actually upgrading for it to become a $5,000 computer to the card. Because they
Right.
think, people think, we as human beings, we think um, this way. We think that, oh, you know what? I'm buying such an expensive machine. I might as well upgrade the memory, you know? And then you throw
Yeah.
in another two, $300 on that. So
Right.
for products, you have to have a different strategy. And yes, there are companies that use discounts heavily, but those are typically the low cost leadership companies, which focus on reducing their own costs so that they can reduce prices to the consumer. So
Yeah.
that's why I said it's so important to make that choice early in your business because you can't not know what you are, whether you're the cheapest or you're the luxury kind of product, or not the
Right.
luxury, but different for different people.
Yeah, absolutely, Tatiana. Good, kind of really good points and good insight. Best practices for us all to take, for sure. Let's continue a little bit along, outside of pricing, just kind of more of an overall thought on just what you do to specifically help businesses and making those critical decisions is so paramount now as you've seen business get impacted by the worldwide pandemic. What are just some of those critical decisions that you advise business owners to to consider and to make? Obviously there was a time kind of pre-COVID as things were going through 2019, and then we get to fast forward to March of this year, and the world kind of gets flipped on its head, and it's continued to have a profound impact, as we all know, on business, to the point that there's a large percentage of businesses that haven't made it, kind of through the pandemic so far. And so, what would you advise, for those, listening here, Tatiana, and, that are some of those top, few, critical decisions that we should all be looking to and to make in our businesses?
So this pandemic was an interesting kind of reality check for many businesses. Some of them unfortunately didn't survive. Many survived because they had reserves. Many survived because of the stimulus money or whatever. But for many businesses, this pandemic has prompted them to reimagine their business model. I have clients who work in who are clothing brands that were kind of split between online B2C and wholesale B2B. And because of the
Yeah.
pandemic, because the physical stores were actually closed, they now redesigned their business model to be more B2C. So,
Mm,
and that approach influences their strategy, their marketing copy, everything that they do. So,
sure.
having clarity on that is probably number one. But
Yeah.
then there's something called a crisis response curve. And the curve kind of starts kind of at the top and then it goes down and then it starts trending up again.
Yeah.
And that starting point where it's a high point kind of at the top of the curve, that's where most businesses found themselves in March. It's a state of shock.
Ooh.
And the state of shock has paralyzed. I've had clients who were freaking out. They didn't know, they thought the world was ending. I mean, luckily, the world didn't end. And most of my clients, I would say 99%, survived and actually thrived because of the pandemic. But
Yeah.
um, it's far from everyone. And what I've realized is that state of shock, let's say for the next pandemic, to be kind of pandemic proof as a business, you need to realize how our psychology works. And the way it works is we get into the state of shock. Then the next stage is desperate actions. So there were a lot of businesses across the country, and I know in our greater New York City area, there were a lot of businesses who were making decisions out of desperation.
Sure.
And when you do that, your business still declines. You still kind of go down the curve. Then that bottom point, the what kind of at the bottom of the curve, is your evaluation stage. You
Sure.
finally out of that shock, desperation, and then you're evaluating, okay, what can I do here? Next step would be deliberate action. So once you evaluated the situation, figured out what you can do to actually bounce back, then you take deliberate action to go back in the game. So the purpose of, or I guess the way to become pandemic proof as a business is to understand that that's what happens. And if it happens again, it could be a pandemic again, or it could be something else. It doesn't matter what it is. To move from the state of shock to the evaluation stage as quickly as possible
Yeah.
so that you can actually have the first mover advantage, evaluate what you can do, what you could do, and create a strategy to bounce back and to pivot your business.
Hmm. Yeah, it's I found that in talking with businesses, I agree with you, Tatiana. I found in talking with businesses through the pandemic, yes, they go through that progression, but I think many that have survived, you know, already kind of had the spirit and culture of adaptability and the ability to pivot. And I think what was interesting is even fairly sizable companies have found where they might have been more stymied by their own size and girth, right, to make quick decisions. Where and examples of that would be, the retail store that normally would get ideas, say from the market, say from experts like yourself, maybe from employees especially, but because it doesn't fit their business model at that time, and or maybe it will work, but you've got the petty corporate structure that says, well, because it wasn't my idea and it was Tatiana's idea, I don't want to implement it, because then Tatiana's going to get the credit, and you know I won't get my bonus, or whoever's above me is going to think less of me, right? And so,
Yeah.
even just things like that in corporate culture, I think have resulted in some folks not making it because they didn't have that ability to quickly pivot, even when something might seem a little bit more radical to them, or it's just not what they came up with, right? It just
Yeah.
wasn't their idea. But for the ones that were open to that and said, like you said, switching from B to B to B to C, vice versa, maybe, thinking critically about their costs, their expenses, negotiating better with their vendors,
Yeah.
um, you know, uh, offering and being able to embrace the virtual piece of doing business now. Matter of fact, just yesterday I did a wine and chocolate tasting with actually someone who was a guest several episodes back, Philip Ashley Ricks, and he's a great chocolatier here out of Memphis, and he did a virtual wine tasting, kind of wine and chocolate tasting. And he's doing these with different groups, and business owners are doing it, looking for ways to kind of spice up their Zoom calls,
Yeah.
Tatiana.
Yeah.
And it was tremendous, well attended. It's nice to get the gourmet chocolates in the mail and the bottle of wine and be on the Zoom and let Philip go through the tasting, right, and tell the story behind each chocolate. And that's been a way he's been able to pivot in his business, where he used to do those things face to face. Maybe he used to do them with a certain, targeted client. And now maybe he's opened that up, to more lanes and that sort of thing. And
Yeah.
so that's, allowed him creatively to, survive. But if he had been real dogmatic and said, nope, I only do it this way. This is the way, we've always done it. We've done it for 100 years this way. Um, and not been open, he may not have survived. And so, I love when you positioned it that way.
Yeah. I mean, for some businesses, it took them a while to go through that shock and desperation. And some businesses I know, like in Jersey, there were restaurants who were just closing down, as opposed to just think for a second, step back. So your service was delivering prepared, let's actually start from here, preparing delivered food to the table, dining in. Okay, what's the step before that? Cooked food, delivered. Okay, what's the step before that? Maybe
Right.
cooking classes over Zoom, maybe recipes sales, or maybe deliver ingredients to people's houses around the community and charge for it, and with the recipes or something like that. You know what I mean? So it's just that understanding that, and nobody was prepared for this, and some people pivoted quickly. Some of my clients have been through different ups and downs. They've been in business for 25 years, so they've been through different things, and they were like, "Yep, I know what to do." But some for whom this was the first shock, it was
Right.
hard, and it took them a while to pivot and find the way to make money and serve their customers.
Yep, exactly. Yeah, it's just a tremendous point that I think we all should understand and respect as we've come through this pandemic. And so, Tatiana, in terms of those decisions, what are some of the I think this, we kind of alluded to this already. Some of the big mistakes that you've seen business owners make. Particularly as they come in with some of their behavior, kind of as the pandemic hit and has gone through, but then from their structure. We were trying to talk a little bit offline, and I think this is great for the audience that oftentimes, for the last decade plus, the LLC became the big kind of sexy, business structure that everybody was being told the structure in the LLC, and they get the 1 point. Oh, it protects you from your personal and business assets. And really what it is that people want to apply for business credit. And then if they can't pay it, not have it affect them personally. Right. That's,
Yeah.
you
Well,
know, um,
yeah,
and so that's again, that's the base level motivation, right? When you get down to the
yeah.
motivation of why people do things. In that sense, that's kind of the primary motivation. Not for everybody, but it can be, just frankly. And so, what are your thoughts on that behavior, and then the behavior around structuring your business properly, and maybe assessing that critically as you go through this pandemic and as it subsides, and whatever the reality is as the pandemic subsides.
I think I'll actually do one better. I'll mention a couple of things that people can do today before the year's over,
Yeah,
that concerns entities and also other things. So first of all, there are a couple of different kinds of people. And number one is people who go in business and just start operating as their own persons, so under their own name and everything else, their own bank account, whatever. Typically, the LLCs are recommended because, like you said, it protects creditors from going after an owner's personal assets like a house or a car or whatever. Now, what a lot of people don't realize is that if there is some fault or some negligence on on part of the owner, that LLC or any other entity does not protect the person's assets. And that's something that's important. So no matter whether you have an LLC or a corporation, if you do something wrong yourself and cause harm deliberately, nothing can protect you. You'll have to kind of answer to the person who got hurt or whatever, a company that got hurt, business or whatever. So the first step typically for many attorneys who advise people who want to start businesses is create an LLC. That's the most simple filing that you can do. It does not require a separate business filing as it is by default. And you can, what's great about LLCs is that you can convert them to pretty much anything, with a few exceptions, in which I'm not going to go into, but you can convert them to something else.
right.
But from a tax perspective, with an LLC, you will most likely pay the most amount of tax if you do nothing about this LLC. If you just keep it as a default LLC as you created it.
Sure.
So as this year has kind of been weird or whatever, it may be a time for you to revisit whether that choice was right. And there are ways to convert, for tax purposes, to convert an LLC into an S corp or a C corp into another entity. But don't stop there. If your business is growing, if you're getting different distinct revenue streams, income streams, actually a multi-entity structure is what I prefer, because that's where you can maximize money back in your pocket legally.
Hmm.
So LLCs are great for someone who's just starting out, who's not sure whether how their business is gonna do. They don't necessarily, they want to try things out. LLCs are great for that. especially
Sure.
in the first year when you're most likely going to lose money because you're investing in equipment or whatever, maybe some professional fees or whatever it may be, right?
Yeah.
Then, once you are in business and you start making money, once let's say you cross the $50,000 net income bridge, maybe
Sure.
it's time to hire a tax planner and potentially convert your LLC into something else for tax purposes.
Yeah. And so, Tatiana, what about, like, sole proprietorship, some of those other structures that a lot of times people tend to start in. And again, kind of going back to, although, kind of speaking somewhat facetiously, the motivation behind, the LLC. If you start a business and you don't have necessarily the concern of, being sued, right? So you're not borrowing money from institutions, and you're not in a business structure that's that leads to an impact of somebody suing you, right? Like think of someone like an e-commerce business, for
Mhm.
example, where if you're just shipping out headphones, though the likelihood of you being sued from something, aside from maybe your relationship with your vendor, but that, yeah, you're the impact of that is pretty low versus if you're in, say real estate, or you're in, something that's got maybe a higher ticket price, and there's a much bigger impact, or something that's medical related, or that sort of thing, where there could be an impact to someone's livelihood, or that sort of thing. Maybe you want protections there. Is that kind of how we should be looking at that, or is that totally off base and we should be looking at it a different way?
I think that it's a little bit off base, but not. But let's kind of let me walk you through it a little bit. So
Sure.
typically, you get an LLC not just for the legal protections. Here's where many people go wrong. They start something, let's say, as a sole proprietor, and they start um, using their personal account for all of the business activity. Then an IRS audit comes in because Schedule C's, which is what this setup is going to be like on your personal taxes, are audited at like 30%. I don't have the exact statistics right now, so don't hold me to it, but
Sure.
the percent of audit on Schedule C's is huge compared to other entities. And when an auditor looks in your records and you say, well, this restaurant here was personal, but this restaurant here was business, the auditor is going to say, because you're commingling funds, you can't really prove to me that that was business and this was personal.
Right.
So having an entity like an LLC allows you to open a bank account for the business and only keep your business activity in that bank account. And then you're sort of audit proofing yourself that
Sure.
way. So that's another benefit of having an LLC. Plus, once you have an entity, you kind of actually treat yourself as a business. It's all serious, it's not all kind of fun and games until that point, or after that point. It's actually becomes a business. So you can actually take on a credit line, or whatever you need, and actually grow it. It's not just to you freelancing or having a side hustle where you make a little money. Plus,
Right.
honestly, all sole proprietorships, if you're making money and you're not registered as anything, you are overpaying your tax. There's no question about it.
Sure. And so when you say you're not registered as anything, are you stating, Tatiana, that they would be just, simply sole proprietorships, or they're just not structured any kind of way? They're just out doing business and sticking it on their personal checking account. They get
Yep.
like, again, going back to the kind of the social media kind of aspect of this. And again, that's some people's motivation. Some people it's to, and this is actually great for a lot of people, work their job and kind of have that side hustle. So they work a job, they make 40, 50, 60,000, whatever it is. And then if they can make a little extra from doing something else, that just kind of either, allows them to add to savings, allows them to maybe get ahead on the bill, allows them to travel, do different things and take care of different things. I think that's tremendous. But a lot of times those folks may not structure themselves really in any kind of way. They're opening to businesses to set up a Facebook page, maybe get a website, maybe not, and then maybe get a Etsy or Shopify or something like that, and then just kind of go start doing business. So do you recommend that those folks, even at that base level, where their only goal is really, um, see if it works. Now, if it booms and jumps off, then they might go to the job and say, "Hey, thanks, but no thanks." But if not, then they just keep doing it. They make their 50 grand a year. They might make an extra, two, three, 4, 5 grand on the side hustle, and that may be good.
I mean, it could definitely work, and it works
Sure,
for many people. But like I said, many people make the mistake of commingling their money for business and personal. And my advice generally is LLC doesn't hurt. I mean, there are some states like California, for example, where LLCs pay $900 tax just straight to California for being an LLC. But depending on how much you're making, so you definitely should run your numbers whether it makes sense for you to actually have an LLC, but it doesn't hurt. It allows you an opportunity to grow if
sure,
you wanted to grow, and then maybe convert it to something else when it has come to a point for you to go to your employer and say, I'll see you later, and kind of keep working in your business. You don't have to change much, because here's what happens. If you're a sole proprietor, and sole proprietor, by the way, is exactly what you described. Someone has an Etsy account, Facebook account, or whatever it is, and
yeah,
they're not organized as anything, any entity whatsoever. So like, typically what happens is that they, like, if you do have an LLC, you have that option. If you don't, then you work till a point where, let's say, you have to hire a designer and you have to pay them and issue them a 1099. You cannot issue a 1099 under your own social security number to somebody. So you have to have an EIN. So if you have an EIN, you're a business. So why not have an LLC as a business? Once you start outsourcing maybe certain things or sourcing things from different places and factories and countries and states, you are potentially opening yourself up for lawsuits. Person who worked for you, they got desperate for money, they go to the Department of Labor and say that they were really your employee and not your contractor. It
right.
happens all the time. So having an LLC, I feel like, unless you're making, let's say, I don't know, $1,000 or up to $5,000 a year, I would say over that, get an LLC.
Right. Yep, exactly. No, definitely makes sense. Definitely for sure. Now the one thing, I guess for me and maybe others that are listening is we just want to get on the president's tax plan. So
It's definitely possible.
speaking of that, I guess, again, not getting into the politics of that, but just overall, just the thought, for someone like you, so the president, releases his, at least some of his tax stuff, and of course it's gone around. The big headline is, he only paid what $750 in taxes. Of course, you don't have all the insight into that, and neither do I. But what's kind of the approach to that? Is that a lot of things, purchasing things that can be written off? Is that and reduce taxable income? Is that yeah? How is that typically structured? Not to say you get to that result, but just the process and mindset of it.
So here's the thing. Well, first of all, that article only had the numbers and not the actual forms, but
Right.
it's actually, for us who are tax planners. I'm not just a CPA. I'm actually doing a lot of proactive tax planning. So I actually create those structures for people to save money on tax, reinvest in their business. So you can't look at it kind of from only that perspective. Oh, he only paid 750. Well, how many entities did he own? Some of the entities, like C corporations, they pay their own tax. So it never flows into the personal tax return. So let's say, made millions of dollars in one C corp. The C corp pays tax and then reinvests the money in the business, keeps the money in the business. So that could be done multiple times. I mean, I don't know the details, but a real estate investor, I'm guessing. So with the real estate, especially in New York, every property, let's say, is in its own entity, whether it's an LLC or a corporation. Maybe there's a management company. So there are
Right.
all kinds of multi-tier structures that could have been done or created to keep the money in the businesses, as opposed to shift the money to him as income. Like, yes, he doesn't see that money until he takes it out and pays tax on it. But
Yeah.
also keep in mind that there are preferential rates for dividends, for long-term capital gains, it's possible to pay like Warren Buffett pays like 5% of tax or something like that, like effective rate, very low because of the preferential rates.
Yeah.
So, having multi-entity structures, plus multi-entity structures often have fiscal years. So the years end in March, in July, in December, where income gets picked up in at different points in the year and not necessarily trickles down to the person. It's
Sure.
completely possible. Yeah. And it's usually done to, let's say, reinvest in an owner's pension account. It's
Hmm.
actually a great tax planning strategy, and C corps are great for that. So you wouldn't see that anywhere on the personal tax return.
Right. Yeah, because it's a complete separate entity, so it's on the the business tax return at that point, and then yeah, and so yeah, I could see that. I mean, that definitely that could make sense. I think those are strategies that I think most people, I guess, don't get that level of education, and maybe there's certain thresholds you got to cross to for that to be a reality for you, but. So it's very interesting, but I know that the headline, of course, gets all the
Yeah,
all the traction, of course, here in
yeah,
America,
yeah.
especially. So,
But it actually brings us to an interesting point, and I don't know if you want to take a conversation there,
yeah,
but
please, yeah,
that's where kind of a traditional, and has to do with a lot of people's mindset about an accountant as a professional.
right,
Um, for many years, accountants have been people who gave you what you needed. What you needed was get your fat taxes filed, get you out of trouble, or keep you out of trouble, or whatever it is. And that whole engagement is actually full of hate, meaning people hate dealing with their taxes. People hate paying someone to prepare their taxes. People
right,
hate paying taxes. So there's a lot of hate going on in that little circle.
right,
So I got trained as a tax planner, and there's about 2,000 of us in the nation. There are two different organizations that certify people like me. And what we do is we'll look at a tax return from a perspective of, okay, what can we do here? Knowing that this person has two children, a couple of relatives that they support, what can we create to reduce the amount of tax using legal strategies? And by legal
sure,
strategies, I don't mean, telling you as a business owner, oh, charge your personal stuff in the business. That's not a strategy.
right, right,
The
right, right,
strategy is restructuring your business, maybe separating different revenue streams. I'll give you an
yeah,
example. So in 2017, we got a new tax law, tax reform. And part of that tax reform created this very important deduction of 20% for pass through businesses. So you actually were saving a ton of tax if you were a qualified business.
yeah,
And that deduction kind of created a threshold for businesses who are professional services, like accountants were excluded over a certain amount. Everybody except for engineers and architects were excluded on the professional
sure,
side. So if someone, let's say, were a designer, interior designer, and there's
hmm,
many interior designers who also have access to very unique furniture that's sold only to designers. So a designer ends up creating the design of the room or the house and also sells the client a bunch of furniture. Now, the design service is excluded from that qualified deduction. The sale of goods is not.
mm,
So that created an opportunity to create two different entities that talk to each other, that pay each other or hire each other. And
sure,
this one would get the 20%, this one wouldn't.
yeah,
So
yeah,
there's
yeah.
definitely a lot of stuff.
Yeah, I've seen that. Of course, in doing real estate, I've seen companies structure that way, where they'll structure a marketing company that then, that's under one umbrella, and then you've got the real estate company, and then the marketing company provides marketing services to the real
Mhm.
estate company, um,
Yeah.
and then vice versa, right? And so people create their, not say their own competition, but they create their own resources by structuring businesses that way. And maybe some of those resources overlap between the two entities, but nonetheless, they're two separate entities, right?
Yeah.
And
Yeah.
so, yeah, I've definitely seen that.
The trick here is you can't just create an entity structure or a tax plan just for tax purposes. But if you think about it, it's very easy to find a business purpose for this setup because they're two separate businesses. Yes, they provide a service to each other, but I could sell furniture maybe to non-design clients.
Yeah.
So you have to have a good purpose. So that brought us to kind of having accountants who are now much more expensive, but they
Hmm.
also give you a return on your investment in them. And that's where the
Yes.
mindset of people has to shift a little bit. You have to invest in a professional to create tax savings for you and pay for themselves, and actually for you to get more money on top of their fees.
Yep, exactly. Yep, definitely makes sense. Tatiana, and this has been, tremendous dialogue, just to say the least. I've learned a lot. I've been able to capture notes and stuff as you were speaking, that I can follow up on myself. And I think MYB, many of you are looking to do the same. As we, kind of wrap up, our dialogue, what are just some, best practices that have worked personally for you in business that others that are listening could take those same insights and best practices and maybe be a little bit better for themselves. So what are one or two things that really work for you that have worked for you over the years that you like to share with the audience?
Yeah, absolutely. There's one thing that I kind of wasn't brave enough to do for a couple of years. And then when I did it, now I just can't imagine or can't understand why I didn't do it before. And that
Yeah.
thing is investing in myself,
Sure.
investing in my growth and education. I've taken multiple different trainings on different things, retreats, quizzes, courses, and other many other things, coachings, and that kind of saved me time in my own growth and allowed me to create a little mini empire with the book and the tax business and the educational services. And I just can't believe that I've waited so long to really have the courage to invest in me. I thought, I can't afford it or whatever, but when I had a good feeling about a program, I just went in. I got a new credit card, and I know it's not perfect, and you shouldn't listen to an accountant saying get a credit card, but there are sometimes life changing programs, and a couple of my first ones were life changing, and something that many people get hung up on. Oh, I can't afford it. Sometimes, if you know that this program will take you to the next level so much faster, maybe it's worth the effort, and get the credit card, and then you'll pay it off in the next year,
Yes.
because you'll generate money with that new training that you've just got. That has helped me tremendously throughout my career. And I
Yeah.
would just wish I did it more often and more courageously than I did.
Yeah, well, no, that's a great, it's definitely a great best practice in terms of investing in yourself. And, many folks to that point, that, maybe they're in the workforce and they're in corporate. I say this a lot, Tatiana, is, leveraging the training. If you work at one of these, Fortune 500 companies, more than likely you're going to some pretty robust training courses and things like that. You have access to maybe third party trainings and things like that. And a lot of that training is at university level, whether it's undergrad or even grad level courses that you're taking, and you get these certifications. And I share with people all the time, there's a lot of that information, a lot of that skills that you pick up can translate into your own business.
Yeah,
And being able to leverage templates and things like that. I think it's tremendous. So I tell people all the time, like you said, to invest in yourself when you go to these. Don't look at it as just a bore or just
expense.
something you got to do. Right,
Yeah,
really invest in it, because what you may find in the training is what that company's um, gaps are, in their business model. Maybe there's a population they're not serving that could create an opportunity. Maybe the way that they're serving their population has evolved, but maybe they haven't quite yet.
yeah,
And that opens up opportunities for ideas and where you could, serve and maybe get in at a level with your own business.
yeah,
Maybe not as a direct competitor, but maybe as a, kind of a entity that services what that large company maybe is not as nimble, or maybe just is unwilling to serve, and that creates an opportunity. So
absolutely.
but it starts, like you say, with that investment in yourself. So Tatiana Sawyer is our guest today. As you see, just a bunch of wealth of knowledge on all things and how we can be a little bit better with our businesses, so our businesses can be just a little bit better in our communities. Tatiana, for those that want to continue the conversation, those that want to connect with you, how can they do so and learn more about you and possibly for those that would be interested in doing business with you and having you come on and be that support, advisor and that resource. How can they do so?
So I would start with my main website, talktotatiana.com.
Yep, love
You
it.
can get some free resources there, and also find how to connect with me. And if you're interested in the book, pre-order the book, and
Yes.
just follow and stay in touch, because I'm putting a lot of information out there because I'm committed to helping businesses grow and avoid the costly mistakes, especially money related mistakes. And it's just, you will get a lot of kind of free information that you can use and grow and help yourself and develop into and really have the business of your dreams.
Yeah, absolutely. Yeah, that's tremendous. And so that's talkwithtatiana.com. That is
Talk to.
talk to, I would say not talk with, talk to Tatiana. Let me make sure I get that right. Talktotatiana.com. That's in the show notes, MYB. So make sure you can click there and definitely connect with our guest today, Tatiana Sawyer. Tatiana, this has been tremendous. Again, I've learned a ton. It's always interesting subject matter for someone like me that's a former banker. It's always yeah, interesting to get this information. I think everyone listening got just a wealth of added knowledge, and we got a chance to have a little fun with it with our car wash kind of
Yeah.
scenario. So we could give some practicality
Yeah.
to that. So that's tremendous. So thank you so much. Best wishes to you and family going forward, and look to remain connected.
Thanks so much, Ron.
All right, excellent. That was Tatiana Sawyer. Make sure you go to talktotatiana.com. Talktotatiana.com. Make sure that you go and connect with her there. Listen, MYB, don't forget champronbrooks.com. That's where you can connect with me. I'd love to be able to hear from you. You can email me, ron@champronbrooks.com. This has been episode number 207 of the Minding Your Business podcast, entrepreneurship, real estate, trending news. There's no business like minding your own. Be safe out here. As we're into the fourth quarter of the year, and 2021 is upon us. How are you going to position yourself to be ready for 2021? Everything doesn't hinge on a vaccine, right? Everything doesn't hinge on what happens November 3rd. Whatever happens November 3rd, you're still going to be there. You're going to have your business. You're going to have your life. And so rather than directing your energy towards how you're going to feel about the results of November 3rd, whether you're going to like the results or not like the results, just remember that every day is another opportunity for us all. And no matter who you come across, no matter what side of the tracks they come from or how they look in the mirror, we all want the same three basic things. We all want to be a little better for ourselves, a little better for our families, and a little better for our communities. And if you keep that in mind with everybody that you come across and come in contact with and respect that about all of us, we'll all be just a little bit better. Okay. So thank you so much for connecting with me. Thank you so much again to our guest, Tatiana Sawyer. And thank you so much for your support of the Minding Your Business podcast. Take care and be great.